as a new potential investor. There's no dilution, fully cashed up, perfect jurisdiction in the world, number one on the planet, which is Nevada, robust asset, low cost to build, low cost to operate. It's got all those check marks on the right side of the page, or the left side of the page, as I call it.
Peter Ball joins me now. He's the president and COO of Noram Lithium Corp, trading on the TSX Venture under the symbol NRM, and in the United States under the symbol NRVTF. Peter, welcome.
Hello, James West. Nice to see you again. It's been a few years.
Great to see you, too. We've seen each other in many incarnations over the years. But today you are the Chief Operating Officer of Noram Lithium Corp, which we have covered previously. I think the last time we had the company on the show was in 2019. So why don't you take us from 2019 to present day? What has changed to bring you aboard?
I joined 5 months ago. My goal was to help on the engineering side, help find some capital, and help take this asset to the next level as we push to the next stage of the engineering side. So first of all, what are we all about? We are focused on the Zeus Lithium Project in Nevada, right next to the highway, paved road, infrastructure, power going right through the middle of our project. Recently, well, I guess let's start in 2021. It was one of the biggest years in the corporate history, completed its 5th resource update, which has enough resources now for 200 years of mine life. And what do I mean by that? In December of 2021, we completed a preliminary economic assessment with a 40-year mine life, and using the long-term forecast price of lithium carbonate equivalent, we have about a $2.7 or $2.67 billion market cap, net present value, NPV8, with an internal rate of return of 52%. So we're at the PEA stage. We're in one of the most active areas in Nevada, sitting next to, as maybe your shareholders or listeners in 2019 followed, right next to a company called Albermarle Silver Peak Mine, which is the only lithium brine project or mine in the United States. They've been there 60 years. So picture the brine leached into the clays, and now all these players, which of course is us, we're fairly advanced, sitting right next to Albermarle, pushing forward this project, cashed up, ready to go.
Yeah. So when it comes to lithium in clays, there are scant examples of lithium producers producing from clays. So have you got a proven technology that you're using to develop your clays, or what is the process of extracting lithium from clays look like?
Yeah, so if we go to Nevada, there's a number of projects that are advancing their final metallurgical studies on how to exactly extract the lithium from the clay. So right next door to a company which I think many listeners should Google is Cypress Development Corp. So picture, they have a deposit, we have the other half. They trade at 260 million market cap, we trade at 70. We have the exact same deposit, metallurgically speaking, mineralization, geologically speaking. So they've advanced it. So we're basically, picture deposit 3 kilometers long, 1 kilometer wide, and about 80 meters thick, roughly. There's no drilling, there's no blasting. You scoop it out of the ground, you put it through some roller crushers, you stick it into some big tanks, you disaggregate it 30% solids to water, and that kind of breaks up the clays. Then right now, groups are looking at either adding sulfuric acid by building a sulfur plant at site, which we're looking at, and some groups are looking at hydrochloric acid. And it's good. This doesn't really interfere with the environment. There's no cyanide. So it's probably one of the easiest mining methods, processing methods that is being engineered and being finalized. And about 40 miles to the west, another company called Ioneer is actually going into construction this year. They have some clays that they're going to be extracting, and the Lithium Americas has the Thatcher project north of us. So we got a bunch of clay. Everyone's finalizing the metallurgical mechanism to extract it, and really we're pushing to PFS. We'll do some pilot plant tests this year. We've got about 18 million, 17.5 million in the bank. We have no warrants really above us. We have no debt, and we only have 88 million shares. So we're fully financed all the way through the definitive feasibility study. with a recent group that I just brought in as a strategic investor out of Toronto.
Your PEA, it published in December 2021. You expect to realize $9,500 per ton is your all-in production cost?
No, so 9,500 is the base case model of what the lithium price will trade at in the future. So that gives us a net present value of 1.3 billion. But really, when this study was done, just to copy what our neighbor did next door, to put apple to apple, Cypress Development Corp to Noram Lithium Corp. But our all-in cost for operating is about $33.55 per ton, which today lithium carbonate equivalent is trading at $92,000 per ton, with a long-term forecast predicted to be, or forecasted to be, about 15 or 16,000 over the next 10, 12, 15 years.
Really? That's incredible. We've been following the lithium price for quite a while. So then in terms of cost of production, do you have an eyeball on that yet?
Yeah, the cost of production is the number I just mentioned, which is $3,355 per ton. So on our property, if your listeners go into our presentation, nearly every bit of dirt that we have on our project, which grades at about higher than 400 ppm across our project, pays. In other words, if we accidentally scoop the wrong piece of dirt into the processing plant, it'll probably still pay. So yeah, it's gone through the roof. And I mean, if listeners kind of back calculate, what does this mean? I call it the white gold. So if you back calculate it and put it at, say, if this was a gram per ton of gold sitting in Nevada, which a lot of mines operate, I used to run a company in Nevada, their average grade is about half a gram, 0.45, 0.6. We have 25 to 35 million ounces of gold equivalent at today's prices at a gram. So it's significant, robust. That's why the strategic investor, I raised $250 million in my day. And I phoned up a friend who is running a big fund group out of Toronto. It was the easiest raise I think I've ever done, and we did about 17 million Canadian in a couple of weeks and closed it. And no warrants at a premium, and now they control about 16% of the company.
What was that, Origin?
It was Waratah Capital Advisors, and they have a number of funds, and they basically run a bunch of money for a number of pension funds and other groups and institutions around the world to find great projects that they've vetted out, that they've de-risked in their internal office and their engineering and metallurgical team. And they take a big stake. And they bought 17 lithium companies, and we were the latest and probably the quickest.
So what does your PEA have as the capital expenditure requirement to put this thing on the map?
Yeah, so the CAPEX, again, if the listeners go into our presentation on one of the pages 3/4 of the way through, it highlights that ours is $528 million to build a mine. And really, 300 million of that is the sulfur plant. And 100 million of that is actually contingency. So it could only be 428. And if you put that along and compare to a number of our peers, we have one of the lowest operating cost profiles, one of the most robust PEAs, one of the highest IRRs, one of the longest mine lives, solid grade, fast payback period. And it's kind of getting exciting because even Elon Musk texted or tweeted last week that he says enough is enough. You must just go buy some mines. And I was talking to a colleague who's well connected within Tesla, and Tesla has asked a colleague of mine find Elon Musk the mines to buy because he needs the feed. Because there's going to be a big crunch in about 2040. So the strategic investors that just bought into our company, and we'll do about 31,000 tons of lithium carbonate equivalent per year. So in 2040, there's forecasted to be 4 million tons of a supply crunch. In other words, the market's going to want 7 million tons per year. It's only going to see 3 million. So really, as a new investor in our company said, Peter, the market needs 100 of your companies just to barely meet the need of this EV revolution, or whatever you want to call it.
You bet. So then In terms of lithium production, in this price environment, grade is not really that relevant beyond a certain level.
Yeah, I would agree on that. The margins are so high in regards to all the operations that are going into production where it is now. I mean, it's $92,000 tons per day. $92,000 per ton today, the cost of that lithium carbonate, but it's going to come all the way down over the next 5 years, down to about 16 long term. So really, I mean, ours is going to average about 1,107 ppm over the entire mine life, giving us a payback period of 3 years. And really, we're going to crunch the 40-year mine life maybe to about 25 to see how the numbers come in. You know, because after 20 years in NPV, it doesn't make sense running the numbers all the way back 40 years to today. So
Sure. So have you got any partnerships with any future offtake people at this point? Have you had those discussions yet?
Lots of discussions always going on. I mean, everyone, you know, it's lithium is designated as a critical mineral in the United States. So it's kind of hard with a different, you know, channels to market of how to get our lithium to China, for example, or Korea. But there are a lot of players knocking on the door at all times trying to secure an offtake, but it's a bit early for us. There's no rush for us. We got an incredible project and we'll get a better dollar for the shareholders later on. And really, you know, as our new largest shareholder said, Peter, over the next year, as you go to the PFS, pre-feasibility stage, you're just going to be a takeout with a nice premium, or you're going to have a nice, beautiful, robust mine in about 4 years. So they're excited because they bought a 1% royalty in our company, which is the reason that we took them on as strategic partners. They want nothing but the best.
Right. Okay, so then do you see that there is a risk of oversupply in the lithium space at all, despite these rosy projections? I mean, especially in the case of, I've been tracking a whole bunch of alternative battery chemistries that don't contain lithium. So how likely is it that one of those might displace lithium-ion batteries in the future?
Well, I talk to the people that are a heck of a lot smarter than me, and they follow this space, they invest in this space, and they're putting billions of dollars into companies like ourselves, and of course a lot larger. They don't see any change. They don't see anything on the horizon that's going to give a hiccup in this. And again, the market needs about 100 projects like us just to barely meet the need. So there might be new technologies, but they're not going to fill the trough to really supply the markets. And as you can see, Biden recently put forth an executive order to help finance, provide funding, provide creative ways to bring lithium development projects faster to the market. And even Canada recently did $2.5 billion to help some of the producers, the spodumene projects up here, or the hard rock ones.
Yeah, the Defense Production Act that Biden used to set aside at this point $2 billion for U.S. projects. They have to be domestic in the U.S., in the territorial U.S., can't be for export to China or Korea. Do you expect to access any of the funds under that funding facility?
Yeah, I mean, it's something we have to look at. Again, we have enough money and have access to pretty much whatever money we want going forward, but non-dilutive free cash from Biden and the U.S. government is something that we'll definitely take a look at. I've seen a number of groups actually have engaged some legal teams to access that capital. So absolutely, why not? It's free. And but again, we're financed. I mean, we have no more dilution coming to our company for probably 3 years. We got 17 now. We'll probably finish off the year with 12, 13 as we do pilot plant, drilling, PFS. And then next year we'll start doing some social, environmental, and more de-risking of the asset. But we're on the right path, and it's always good when you're at a company and as a new potential investor, there's no dilution, fully cashed up, perfect jurisdiction in the world, number one on the planet, which is Nevada, robust asset, low cost to build, low cost to operate. It's got all those check marks on the right side of the page, or the left side of the page, as I call it.
You bet. All right, Peter. Well, that's a great update on the company. It's really made some progress. Congratulations on joining, and thanks for your time today. We'll come back to you soon and get an update again.
Thanks, James. Have a good day.
Thanks, you too, Peter. Bye for now.